welcome back to MJ Crypto, and this is the second edition of trend patterns. Okay, previously we talked about reversal patterns where we made mention of double tops, double bottoms, but right now we're going to be talking about the continuation patterns, and this episode is actually sponsored by Bitget Global. Okay, top 5 ranked on CMC, one of the best derivative exchanges in the world currently. So now let's dive into the quest of today, continuation patterns. The very first on the list here is the bullish flag pattern. The bullish flag pattern is actually a continuation pattern towards the upside. It consists basically of a long bullish pole. In other words, buyers were actively involved, okay, to push the price upwards without any stop. And then it gets to a particular point, it breaks down and then forms the flag. You can see the flag here represented by the falling wedge. And thereafter, it breaks out again. The price breaks out of this falling wedge towards the upside. Then you can say you have a full bullish flag pattern. Now, the bullish flag pattern, whenever you catch this, definitely you're going to make so much profit because your target is going to be the length of the pole, okay, the previous pole, and then your target is going to be what? The length of that pole. All right, basically in simple terms, this is what the bullish flag pattern is. So basically, this is what we call the bearish flag pattern. It's the opposite direction of the bullish flag pattern. The bearish flag pattern begins with a downtrend and then tries to make a pullback towards the upside, but the sellers are actually way more than the buyers, and then they push the price down, forming another flag pole. All right, basically it's the opposite direction of the bullish flag pattern. In the next session, we're actually going to be talking about the cup and handle. The cup and handle is more of a bullish trend. In other words, it has no bearish trend. In most cases, when you hear about the cup and handle trend pattern, you are most likely looking towards the upside. The cup and handle is actually a bullish confirmation trend pattern. In other words, the price actually starts to progress towards the upside and then retraces back again, forming the cup, then the handle, and of course, the breakout eventually. Now, look at this picture very clearly. You can see we have 3 parts labeled. Okay, we have the cup, we have the handle, and of course, we have the breakout. Now, in most cases, BTC actually produces this pattern a lot. I'm going to tell you the psychology behind this in the next video, all right? But for now, understand that the cup and handle actually what shows you a confirmation trend pattern towards the upside. In other words, the price moves up, retraces, forms this cup. You can see the support line forming a curve, all right? And then retracing back to the previous support, and then eventually it breaks out. All right, basically this is what we call the cup and handle. Whenever you see this, know that it's actually a confirmation towards the upside. Triangles are very essential on trend patterns. All right, basically we have 3 kinds of triangles. We have the symmetrical triangle, we have the ascending triangle, and of course we have the descending triangle. Now for the symmetrical triangle, basically the price can either break towards the upside or the downside. It all depends on where the breakout occurs. In other words, it is most likely a 50-50 chance of win rate. Okay, the symmetrical triangle. And this is because we are having a support line that is actually slant or slopey, and a resistance which is actually what? Slant and slopey, because it is very clear that the number of buyers and sellers are in equal proportion. That is why it's called a symmetrical triangle. You can see the resistance is sloping towards the downside, and the support is also what? Ascending towards the upside. So we have almost equal buyers and sellers in this market. So you can't really tell the direction of the breakout. All right. But the ascending triangle, we have more buyers because we are forming higher highs. You can see we have a horizontal resistance line on the ascending triangle, and of course we have a slanting support line telling you that what buyers are more active in the market. All right, good. Now for the descending triangle, we have a slanting what resistance and then a horizontal support telling you that sellers are more active in this market. That's for the descending triangle, and it's a continuation of the previous trend. You can see that we're already on the downtrend on the descending triangle, and the trend is most likely going to continue. So basically, this is just the psychology behind triangles. All right, it's so easy, and it's something you should actually be abreast with. All right, very, very, very simple. You don't have to stress yourself trying to figure out where is the line supposed to be, where is the support supposed to be. No, you don't have to do all that. Just understand the psychology behind the triangles. All right, and trading is going to be fun for you. Next, we're going to talk about the wedges, and then we'll wrap it up very quickly. So there are actually two kinds of wedges. Okay, we'll have the falling wedge, and of course we'll have the rising wedge. But this is a typical illustration of how the falling wedge operates. Okay, at first we'll have an uptrend from this position here. It moves up and then it retraces, tries to form a wedge. Okay, the wedge consists of two parallel lines, okay, or what we call two slanting lines. All right, basically, and then the breakout occurs just afterwards. The two lines begins to contract towards each other. Okay, basically this is how the falling wedge operates. Now it is a continuation pattern because when you see an uptrend and then the wedge falls down, tries to find support, it is most likely going to break out towards the upside because there are so many buyers currently on this market. All right, that is why it's called a continuation pattern of the uptrend. Just before we conclude, here is the bullish and bearish rectangle pattern. Okay, you can see here we have two images. The one labeled in green color is the bullish rectangle. Now, the price starts as an uptrend and then it consolidates within this particular phase where we have black, and then the price breaks out of that phase, continuing the trend, which was what? The uptrend. And now for the bearish rectangle, it started as a downtrend and then consolidates for a particular period and then breaks out just below the support zone. Basically, this is what we call the bullish and bearish rectangle. I want you guys to check out Bitget. They've actually sponsored the technical analysis series right from the beginning of candlesticks to trend patterns on this channel. I'm giving them a shout out right now. Go check them out. Link in the description, and then sign up and get bonuses when you trade on Bitget. Cheers, guys. I'm going to see you in the next video. The weekly update is going to start tomorrow. Happy new month and peace out.